What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
This is perfectly timed because Novogratz has been the piñata of Bitcoin when it goes down. It's been the genius of Bitcoin when it goes up. And all of a sudden, Larry showed up at the door to say, hey, big, respectable firms can prosecute and do Bitcoin. Link Lawrence Fink of BlackRock to Mike Novogratz.
Well, what's happened is people, as you suggest, make fun of Bitcoin and other cryptocurrencies, but now the establishment, Larry Fink at BlackRock, is now saying they're going to have an ETF, if approved by the government, in Bitcoin. So you're saying, wait a second, if the mighty BlackRock is willing to have an ETF in Bitcoin, maybe Bitcoin's going to be around for a while.
Lisa wants to jump in here, but I'm going to cut to the news moment. Is Carlyle announcing this morning a Bitcoin advocacy?
No, I don't think so. But there's no doubt that Bitcoin is something that I wish I had bought it at $100 a Bitcoin when Mike Novogratz started buying it. It's now at $29,000. So he's made a lot of money. And a lot of people who bought it at the $100 or less are feeling pretty good.
Welcome back to the last trade. Started out with a little clip there from David Rubenstein of the Carlyle Group, diving into Bitcoin. And
does that mean Bitcoin's going to be around for a while, Marty?
I think so. I think it just may. I think our wives may wind up thinking we're not as crazy as they currently think we are at some point in the next decade. No, but I think with the ETF approval too. I mean, we wanted to dive into CPI, but that just made me think about the Fed announcement earlier this week, and the Fed announces new oversight programs for crypto activities, and so it seems like the setup for the Bitcoin ETF, the infrastructure on the regulatory side is beginning to get laid. So I think this week was a positive signal for the ETF approval. And to introduce our guests, we're joined by Cam Doody from Brickyard, venture firm out of Chattanooga, Tennessee, who's been really getting into Bitcoin in recent years. I guess before we dive into what you're doing at Brickyard, Cam, I guess just your general thoughts on what David Rubenstein was just saying there, the overall tenor of institutional capital becoming more comfortable with Bitcoin as an asset.
I mean, when I first saw that, you're looking at the top dog at Carlyle. It's like you can tell his level of understanding of Bitcoin is just so surface level. It's like you're talking about like, yeah, I wish I would have bought it because it's now at 30,000. It used to be at 100. Like, is that the insight that you're giving? I don't know. It just feels like every time I see these, legacy high finance folks talk about Bitcoin, when Jamie Dimon's talking about Bitcoin, when it's like you can just see it on their face. Like they really they don't understand the asset. It's like they're being forced to pay attention to it, but they've still feels like they've just done like the minimum amount of work to be able to, throw something out on national television and not look like an idiot. But I don't know. It's just unimpressive when I saw that.
Yeah, and that's the trend, right? Like that's what's happening to all of these guys. They're all being forced to shift from laughing at Bitcoin to like now acknowledging, well, I wish I had gotten in earlier, and I'll take it. That's going in the right direction. And how many times are we going to see this? Like, how many Wall Street titans are going to drag their feet on learning about Bitcoin when their set of friends or colleagues they have in their investing community that are bullish on Bitcoin keeps growing? Like, all you have to do is listen to Paul Tudor Jones, Bill Miller, Stan Druckenmiller, Novogratz, now Larry Fink, to get some information that says actually Bitcoin is something that you should be including in your strategy. And so there's some tipping point coming, and I think we're seeing the precursor to that, right? Like the shift from laughing at Bitcoin to acknowledging that Novogratz had a winner. That's pretty big.
Yeah, totally. Yeah, I mean, I think what's that? You know, the phrase, talking about somebody like that when Fink came out and started talking, when Jamie and Dimon started talking about Bitcoin, it's like it's the classic. First they ignore you, then they laugh at you, then they fight you, and then you win. I think for a lot of these people, they're being forced to think about what stage are we really in here. I mean, this is the beginning of the assimilation of high finance, and I mean, to your point, like I'll totally take it. But it's the people that know the most about the current system that are going to have the hardest time really understanding this, this paradigm shift, because they have to unlearn everything that they know. And so anyway, I guess my point was just that it's kind of funny watching somebody like that try to dip their toe in something that's, dip their toe in the the deepest ocean, deepest point in the ocean. It's just it's funny to watch.
To be fair and level set on some of these guys, though, I think we might be doing disservice for some of these names. I think the Drucken-Millers and the Paul Tudor Jones are in their own class. I think Novogratz has randomly found himself with all these names. When I was looking for that clip this morning, I stumbled on his clip that I think they were referencing, where he was talking about crypto and the universe and like money as a social construct. It's like, these guys don't even really, I would have it hard to believe that Novogratz actually fully understands what's happening here. But to Rubenstein's credit, he did probably another 60 seconds in that clip does reference a lot of the value proposition of Bitcoin from a permissionless nature, and also not being governed or controlled by any one sovereign, which is interesting from somebody like that, because I'm fully on board with kind of the Fink and BlackRock and what they're here to do in controlling it and long-term plans. But his reference was like, hey, this thing's not going away, not because it's at least what I perceive as a talking point, but I understand that this thing is actually not going away. So now we have to play ball. And he was probably the first person in that realm of somebody that's not like the traders are looking at it as a trade. This guy's looking at it like, shit, I don't think, at least my perception was like, this isn't going anywhere, and it's not going anywhere because I understand there's some fundamental permissionlessness, sovereign nature to this unit that I can't control or nobody can control. At least that's how I perceived it. I'm curious, Marty, because we had a friend share that earlier in the week, and I think that's where he was coming from. And if you kind of picked that up as well.
Yeah, no, out of all the high finance titans that have come out and spoken about Bitcoin, I think David Rubenstein actually had the most cyberpunk take, where he was like, yeah, people are going to want to send money to each other outside of the purview of their governments. And there's going to be a lot of demand for that. Many people may not like that, but that demand's not going away. And yes, agree with you, Michael, to his credit. I do think the talking points he was handed, at least, I think he definitely grokked that. Like, oh, an apolitical sovereign currency that can't be controlled by governments does have a lot of value. And I do think that is the main value prop of Bitcoin. Obviously, the last trade, what we're trying to do here, we're trying to talk to high net worth individuals and institutions and really tap into that crowd. And I think it is actually a really strong validation from David Rubenstein to recognize that that is the main value prop. Yes, Bitcoin, there will only ever be 21 million. There's a bunch of energy dedicated to the network. But if it does not have the ability to act in that cypherpunk nature where it's truly peer-to-peer and individuals can send to each other outside the purview of the government, that may rub a lot of people the wrong way and make people unnerve a lot of people. However, like Bitcoin, the 21 million, the hash rate, none of it really matters unless you can use the asset with that fundamental primitive of being able to send peer-to-peer. So while we all agree that institutions are going to need to get exposure to Bitcoin, hold Bitcoin on their balance sheets, hold it in their portfolios, transact with it at some point in the future, I think David Rubenstein coming out with that line of thinking is actually pretty critical, because people do need to get comfortable with the fact that Bitcoin only has value if it is able to be transacted in a peer-to-peer fashion. If you can't do that, then there's no reason for people to continue securing the network and investing in Bitcoin. The 21 million is secured by the distributed network of full nodes at the end of the day. And if you don't have that, you really don't have anything.
Yeah, I have an additional thought on this. Like, when I see these clips keep happening, and I can't help but think about the Wayne Gretzky quote of, you don't skate to where the puck is, you skate to where the puck's going to be. And I feel like that remains the fundamental difference between Bitcoiners, people who have arrived at Bitcoin today, and the rest of the world, is that if you're listening to this right now, you have a mind that appreciates where the puck is going, and you see that that's where you want to be. And most of the world, for whatever reason, operates with, their operating system is reactive to where the puck is today, and that's where they want to be. And so I think Wall Street is this microcosm of they need more dots before they can connect them to see where the puck is going. And if you're listening to this right now, it's because your brain thinks in a different way than most people, and that's your edge. And it's exciting to think about how it's the asymmetric investing opportunity of our lifetimes, and the difference is whether or not you can appreciate data points like this and where they lead to, or not.
Yeah, it's a really good point, Jesse. Like, there's a predisposition for somebody to be a Bitcoiner that's not even a Bitcoiner. Like, them, and this is like this type of show, or the clip you send to somebody that is like there, and it kind of ties into Cam and what you're doing. We don't know each other, too well, but knowing what you're doing in Chattanooga, your background, and you can share more about it. But there's something there that before your Bitcoin journey, I would be hard pressed to say that you were a Bitcoiner, and recognizing like the value and the things that you're doing with the firm, and some of the first principles from getting back to the basics of like how to actually build a sustainable business, how to incentivize and provide like value, I think is a very it's a value-oriented thing that probably was done for a very long time, and we moved away from it, and we're going back to it. And so maybe that's a good kind of segue. I'd be curious to kind of hear the origin story of Brickyard, but also like I think where that intersects with Bitcoin, because I don't think it's a hard way to explain, but I don't think a Bitcoiner, it would have taken a Bitcoiner to build Brickyard, even though you weren't a Bitcoiner and you have Bitcoin at the time, if that makes sense. The very first principles way to build a brand new venture firm, and also to help entrepreneurs get off the ground.
Yeah, Cam understood proof of work before he learned what Hashcash SHA-256 was.
Exactly.
Yeah. I mean, I think it goes back to the core desire that I've always had, even before, well before being an entrepreneur, being a founder. It's never been about money. It's never been about power. It's never been about like status or vanity for me. When I graduated, I didn't know what I was going to do. I graduated in the middle of the financial crisis, and a lot of my friends were taking a year off work, and I was just anxious. I wanted to get started. I wanted to do something. And I took a job that it kind of just opened my eye. Very few people were hiring, and I took a job as like one step above a teller at a bank in a bank branch in a mall parking lot. And it scared the absolute dog shit out of me. And it made me realize, like, okay, the real world's a real thing. If I don't take responsibility for my own financial destiny, I'm going to be on somebody else's path, and they're going to dictate that path for me. And so it was always freedom that pushed me into, I guess, the way that I've acted my entire life. It all kind of always goes back to freedom. I remember being on a field trip in like 7th grade. We were like walking down this boardwalk at this camp on the ocean, and we were like in a full uniform, you know, like button down, a tie, and, you know, slacks. It's like, you know, hot outside. And I'm looking at these tidal pools, and like all I wanted to do was just jump into these tidal pools and, like, you know, find crabs and like learn the majesty of nature that was in front of my face. But instead, I'm going to have to, you know, walk in a single file line to, you know, some class that I have no interest in. And that stuck with me. I think it was why, you know, school was always difficult, you know, for me to actually get interested in it. It pushed me to be an independent thinker on, you know, across most of the facets of my life. And then when I graduated college, it was like, okay, this is like, it was the final straw. I was like, I have to take, you know, financial responsibility for my own destiny here. And that's what almost like was scared into being an entrepreneur. You know, when I heard about Bitcoin in 2015, my buddy, actually, a guy named Grant Morgan, who's an amazing founder, started R0. He was like, you just need to buy some Ethereum. He was like an Ethereum guy. And he's like, buy some Ethereum and just start learning about it. And that's actually how I got into it. I bought some Ethereum back in 15, and that the world of decentralization just captured me. And the deeper and deeper that I got into it, I started getting this pit in my stomach where it was like a very serious topic run by like very unserious people. And what I mean by that is like, you know, Vitalik and fanny packs and like monkey suits at conferences, and like everybody that I talked to in the space is like, you're talking about something that's very important to mankind, and you are going about it in about the least serious way that I can imagine. And then I started talking to Bitcoiners, and it was like, oh, well, here's the signal. Like, these are serious people. And I started mixing out of Ethereum into Bitcoin. And then we sold our company, a chunk of our company in late 2019. And the Dow was at like 30,000 or something. And I didn't want to go into cash, or I didn't want to go into the market. So I just was sitting on cash. And then the luckiest thing in the world, you know, for me, it was, you know, COVID happened, the Dow went down to 18 or whatever. And that's when I just piled into Bitcoin, among other things. But since then, Bitcoin has just completely taken over my mind. Around the same time that I started, you know, really going down the Bitcoin rabbit hole, we realized that, you know, there's a big opportunity in venture capital in this frothy market where the culture of founders had changed so much over the last 10 years, where you used to feel sorry for founders. You just be like, fuck, I'm sorry, keep going. You know, this is hard. You know, founders in like 2021, 2022, you'd go raise $1 million seed round and you'd think that you were a celebrity, and there's so much ego involved, and like the work ethic had gone away, and work from home was this new thing, and people were like building their companies in like Bali, and it was just like, what's happening? And that was the impetus for Brickyard, and why we kind of like swung the pendulum all the way to the other side. And we just said, we know that everything's going to correct. You know, people are going to start taking this seriously again. We're just naturally drawn to serious people. And that's really how we've built the whole brand around what Brickyard is, and really every component of Brickyard is around, how serious are you? Are you ready to go to war for a decade? And you know, go through the pains of firing your best friends, and you know, and having anxiety so thick that you can't sleep for 3 days, and you know, all these, you know, the toil that every entrepreneur deals with as they, you know, go through their path to an exit. You know, most people think it's easy, and it's extremely hard. So anyway, that's sort of my story, Bitcoin and Brickyard, and we can kind of dig into anything you guys want to talk about.
That's really fascinating, like the juxtaposition that you referenced. I don't know if you said that on purpose or have caught that, like ETH to Bitcoin, similar to like what traditional venture looks like in the fiat world to what you're doing, in the seriousness, and it comes down to the money, right? Because like money is just truth, and it's tied to like a certain finite, value that is proof of work, all the things we know, whether it was gold or Bitcoin. And Ethereum just came out of magic smoke out of Ethereum, Vitalik's ass or whatever. The other what was it, Lubin and the other two, like one other guy. And and so you tie that to why it all, like you were looking for the the signal, the heart, like the proof of work, the people that were serious, in the same way of like the person that gravitates to like, hey, I'll take maybe less capital, but because this is like, I'm actually about this, like I'm not here for the the flash that I just raised $1.5 million or whatever it is. It's very interesting, like the same thing that you saw in both tied like you back to kind of like the first principles of value.
Yeah, as you say that, it hadn't occurred to me, but you're spot on. I mean, that's, totally.
No, like to build on this, I had a very similar disposition coming up out of college. I mean, I was in high school, I was a senior in high school when the financial system imploded, went to college, studied economics, got a job at a fund. And it wasn't necessarily that people were unserious, is that they were complacent. Like at that time, it was transitioning from Bernanke to Yellen. We were in like Operation Twist and then QE2 and 3. And I would sit there as a young portfolio analyst on a small portfolio management team. And we were fund to fund. So I got to literally ask some of the most successful chief investment officers in the commodity trading advisor space, like questions. And at the ripe old age of 21, 22, I was really honed in on Fed policy because I'd been radicalized in 2008 as a senior in high school and then really stuck with it throughout college. And I just remember the rampant complacency that existed at that level of the investment world when I would sit in meetings and be like, hey, do you guys think like Fed policy is going to affect markets at all? And they were still back then, 2012, 2013, 2014, sitting from the position of no, like the Fed is sort of apolitical. Like they have to do what they have to do, but I don't think they're going to affect markets that much. And that complacency really scared the shit out of me. And I was like, oh man, like this is not going to be good. So similarly, like I do not do well working for others. And so throughout my 20s, I quit a few jobs until I finally dove into Bitcoin and decided to carve out a little niche for myself. And not to talk too much about my story, but I really want to dive in to the comment you made about the seriousness between Ethereum and the difference of the serious approach at Ethereum to Bitcoin. Like what did you see in Bitcoiners that really made you think like, oh, these guys are serious, they're actually doing something here?
Well, I think it's probably important to provide some context on like how my journey into Bitcoin came about. Like probably unlike maybe all of you guys, there is no community. There was no community in like 15, 16, 17. I mean, even now in my circles, I'm like the Bitcoiner that I'm not constantly around a bunch of other Bitcoiners. And I went to Bitcoin Park maybe 6 months ago for the first time. And that was the first time where I was actually surrounded by other Bitcoiners. But the feeling that I got there was like the most purely validating experience I can give you. Like I had been years and years of sort of like toiling with this idea that's like taken over my mind like a virus. My wife thinks I'm absolutely nuts. But it was me poring over content on the internet. It started that way. Like I was as interested in Ethereum as or I wasn't as, it was a captivating idea to me. And the one thing that I just could never understand was there was just a disconnect between this is a very serious subject. These are very unserious people. I must be crazy. I'm missing something because something doesn't feel natural about this. And then over time, I realized that I think they just had something wrong. And as I started, meeting one Bitcoin, two Bitcoiners here and there, you'd sit down and you had the same serious topic, but now you had a person that was like totally in it for the good of humanity, the sort of altruistic view of this is good for everybody everywhere. And as a Bitcoiner, like every Bitcoiner that I ever met, it almost felt like that I was talking to somebody that felt obligated to tell me why this was so important. And that was that level of serious that I found. And I said, okay, this is a serious topic. These are serious people. Maybe I need to spend some more time here. And that's what I ended up doing. I started sort of mixing into Bitcoin, and like every time I did it, I felt better. And then, by 2020, moving everything into Bitcoin was a very easy decision for me to make. And I just haven't looked back since. I mean, it's just I guess that's how I'd put it. It's just a very serious topic with very serious people.
Yeah. It's so interesting to think about, like the Ethereum crowd, the whole ethos, the entire culture there is like it's a malignant tumor version of move fast and break things, and software is eating the world, and that means software will eat money. But money doesn't play like that. Money is its own thing. It supersedes everything. Money is the foundation of human civilization, and software can eat it if it's playing on money's terms. If the software is designed to abide by what gives money value, what gives a commodity value, then software can eat money. But you can't brute force your way into a takeover of money by applying a Silicon Valley ethos of move fast and break shit. And that's what Ethereum is doing, and they're drumming up hype on stage by doing little badger dances. That's not how this works.
That's where they lost me.
Well, and been around Bitcoin for a decade, like saw Ethereum come and launch and really understood intuitively during its ICO and post-launch, like this isn't the way to do it. And for the longest time, it would frustrate me, and I'd find myself like in Twitter battles with Ethereans, like trying to explain to them why their approach to this is completely off. And I think over the last 3 years, I found what I call my Bitcoin Zen, where it's like, it doesn't matter. Like, yes, they're going to get a lot of hype, and we can get into a bunch of back and forth arguments on Twitter. But at the end of the day, going back to what I said earlier in the context of David Rubenstein's comments, like if this is going to be successful, I'm going to say this. I've been saying this on podcasts for years, and I will continue to say it because I do truly intuitively believe that there is an order of operations to all of this, that these things are going to succeed. If Bitcoin is going to succeed, like you need to fulfill an order of operations, and the front end of that order of operations is distribution of full nodes, distribution of hash rate, security, like boring lending products, multi-sig, all of that. And then we can get to the fun things. And then that seriousness that you reference, Cam, is something that I'd like to think I've always tried to focus on in Bitcoin. Is like, hey, like all that stuff looks fun and sparkly, and a lot of people are making a lot of money. But like you said, like this is an imperative for humanity moving forward. And we have to be dead serious about this, like focusing on this front end of the order of operations.
Totally.
Yeah. I was just going to say, and like the easiest way to project like what you just referenced, Marty, that we don't talk about enough, and being so early, and that like a lot of the things that have been built aren't actually the things that will be, in 10 years, is the price. If we all believe this works, we know where this goes. We know the amount of adoption. We have like maybe 0.1%, whatever the number is, of actual people across the world using it, and that the people aren't here, the products haven't been delivered, and so we're not we're still that early in reference to like the order of operations. There's all these like different ideas, whether it's on Ethereum or just Bitcoin and the different things that are being built, and it's necessary. But then there's also just like this core foundation that's still required to be built. Yeah,
I mean, when I think about that, I guess what I described earlier is like what initially got me into it. What has captivated me recently over the last year or two. It's like one, Jeff Booth's understanding of, prices will follow the marginal cost of production, like that set off an atom bomb in my brain. Because it was the smoking gun for how the Fed steals. And then as I follow all you guys, you guys do such a good job of like spending time in the macro of like what is actually happening in the macro, and that's not my day job. I don't spend time doing that. So I follow you guys who spend all your time really paying attention to what is happening in all the levers that the Fed is pulling. But like if the Fed doesn't print, okay, if we assume that technology is going to accelerate at a massive pace, which me being in venture, like I know where this is going. Moore's law is not slowing down. We are, the advent of AI is, I think, the greatest thing that ever happened in Bitcoin, because it's going to make everything happen much faster. But, technology-driven deflation is coming and happening right now. If the Fed doesn't print, the dollar goes up, so does the real value of our debt. Economic activity, consumer spending decreases, which, is going to affect tax revenues, which is going to make things worse. Interest rates are going to have to drop, which reduces the Treasury's balance sheet, which makes it harder for them to make payments. Printing will become this like justified thing. Like we have to do this because this is happening. And which this all means, hyper Bitcoinization has to be in this decade, in my opinion, because I don't actually think Powell and Yellen are like malicious, evil people. They're just flying a plane that's going down with every American on it, and they're limited to the controls that they have in the cockpit. But they just blew the engines out. Like the engines are blown, okay, and the only control inputs still available are like stick and rudder, and are they going to just nose over and be like, well, might as well make it quick? Like, no, of course they're not going to do that. And I don't think any of us would do that either. It's like, the thing is I don't think that they actually understand Bitcoin either. And if they did understand Bitcoin, then they would be malicious. But I don't think that they do. I think that they're literally just like, their world is so small. They've got tunnel vision. They're in this cockpit. It's like, here are my control inputs. What do I do now? This is that serious subject. Is just kind of, crazy to think about that we're living through these times.
Yeah. And we are living through these times right now. I was just digging into the numbers a little bit on the debt. Like it's moving so fast that you have to revisit it every few months. So we had the debt ceiling debate, and inevitably they lifted the debt ceiling for the next few years. That was 2 months ago, and we've issued $1.3 trillion of new national debt since then. Now, the U.S. Treasury just came out last week with their guidance, their updated guidance for the rest of the year. So 5 months left, for $1.85 trillion more of debt issuance. It's going to be necessary to keep the lights on for the country, to get us through the rest of the year. So that's 7-8 months of the last 7 or 8 months of 2023. We're going to issue $3.15 trillion of new debt on top of our tax receipts. This is deficit spending in excess of what we're bringing in tax receipts right now. That's happening right now, and it keeps getting revised upwards because the thing that's also hitting the country right now, and I think the policymakers are somehow surprised by this, is the interest expense on our existing national debt is rolling over at these high interest rates right now of 5%. We have $9 trillion of national debt rolling over in the next 18 months. Over the last 18 months, we've had our annual interest expense go up $400 billion. That $9 trillion that's going to roll over in the next 18 months will result in $300 billion in additional annual interest expense on the debt. So together, that's $700 billion of incremental interest expense every single year going forward on our national debt that we didn't have 18 months ago. And
Yep.
How big is that? That's an entire extra U.S. military every year. That's how big that is. And that's an impact that we're facing right now. And how are we going to fund that? We have to issue more and more debt. And here's the debt spiral.
But Jesse, Chamath said it's not a problem. It's okay.
The All In podcast pulled up some of my charts on. I wrote a piece on the national debt spiral, and the All In podcast, they pulled up the charts. A couple of them follow my writing, and Chamath just dismissed it as like, it's not a big deal because the U.S. dollar is the best currency out there. So of course everyone's going to still want the U.S. dollar. But it's not true, because there's a better currency out there, and it's super sovereign. It goes beyond the national level.
I got so frustrated listening to last week's episode of the All In podcast. And I listened to it just to keep a pulse on like what that side of the investment world, like how they're viewing the world. I do think there is a lot of insights that they bring to the venture world. There's a lot of bad takes as well. But when it comes to like macro, I do think they're completely missing the mark and have a massive blind spot. And so, Chamath's rant last week that where's everybody else going to go? Like on a spectrum of relativity, like the dollar and treasuries are the only safe haven in the world. And that's just completely missing the mark.
They're just missing that point. That was the thing, when we kicked off this podcast, like I have this like sort of deep frustration that people can't see. I have to remind myself that people haven't spent the amount of time thinking about this than we have. And my first move is like WTF. Like, but I have to remember, they're the beginning of their journey into really understanding, like the Titanic's going down, they don't really fully understand that there's a perfect boat with no holes in the hull that just pulled up right next to that boat. And the people are going to make a decision whether they stay on this boat or whether they just swim over to this other boat. Like they're not even aware that thing is here,
Yeah. But it goes back to this deeper, like 100-year battle against hard assets that the Federal Reserve won in the hearts and minds of the people. The typical portfolio is 60-40-0. That 0 being hard assets. No, people don't hold gold because they don't think that it matters, because we've been trained to think that yield is the only thing worth having, and that the dollar is a stable measuring stick. Those times are over.
To be fair, all those guys know that this is unsustainable. They just don't know the end, and so that's what makes their like every take that they have. Because like Chamath knows that this doesn't work. He's just talking his book and is a mercenary, so he's trading it. Sachs actually is a Bitcoiner. Like he invests in Bitcoin companies. It's not in his best interest to talk about that. Freeberg is the one that sounds alarm on all that crap, but he doesn't know the end in Bitcoin. And then Calcanis, well, he's fucked. So like that's he literally has no idea what's going on.
I don't like to. Let's focus on the ideas. Like I don't want to talk about Chamath particularly, but like I wrote the newsletter about it this week, and the blind spot that he has is like, even if you run with the assumption that on a spectrum of relativity, people have to pile into treasuries and the dollar because it's the best on a relative scale. Like the blind spot with that line of thinking, we don't even have to bring Bitcoin into the mix, is the weaponization of the dollar over the last 2 years. Like, yes, on a relative scale, from an economic standpoint, the US may be way better than all the alternatives. However, the weaponization of the dollar over the last 2 years is going to force sovereign nations to seek alternatives, even if they may be considered less optimal than treasuries or the dollar. And that's like taking Bitcoin out of the mix and just focusing on that scale of relativity that he mentioned. He has a complete blind spot where, yes, relatively speaking, the dollar and treasuries may be better place to park your assets, your wealth. However, like the weaponization of that system is going to force people to seek alternatives. And what that ends up being, we think it should be Bitcoin, but I think we'll find out in the years to come, they're going to try a bunch of different alternatives. And that is being driven by the fact that they are now forced to because of the weaponization of the dollar system.
But he knows that.
Yeah.
Like, Chamath is the smartest person on that pod. It's the same reason we're like on the past week, it's talked about Joe Rogan and how he doesn't talk about Bitcoin. You think Joe Rogan doesn't have an idea of like what the fuck's happening here? He alludes to it. There's a reason why they don't talk about it publicly. It's not because they don't understand the weaponization. Like, that's one order from what just happened with Russia. Like, he's talking a book for his investors. He understands what's happening here. He cannot just like speak of it for a number of reasons. But he knows, like, these guys are smart. Like, it's not, I wouldn't give it.
I don't know.
Why can't Rogan talk about it?
Dude, he's talking about issuing 100-year bonds. Like, and like, yeah, we can do that.
Well, because that's how he trades it. That's how he plays that. He's made billions of dollars. He has investors. He has his social capital. Like, there's a whole thing. He even talked about it years ago. He's like, okay, I'm going to quit leaking alpha. Like, I'm just not going to explain how I'm going to play this. It's like, where would he benefit? It's like, oh, this is all fucked. The dollar's done. Bonds are screwed. Like, going into that, where does it benefit him in any world that he plays in to say that and to all his investors? Like, he knows that what we're talking about. It's just like, anyway.
I totally agree. I wonder though, like, but why would Rogan not talk about it?
Somebody had an interesting point on this. If like it's too polarizing. If Rogan was to talk about Bitcoin, then he'd have every altcoiner, like, you know, banging on his door saying you have to give equal time to this other side of the story, and he doesn't want to deal with that.
But Rogan loves that shit. Rogan will will go hard on a topic that's massively unpopular.
I haven't thought deeply, but I saw the same take, and that's what sparked the reference to Rogan. I think there is an angle where this stuff is that serious where he's like, fuck it. Like, I'm not going to go there because it really is that serious. Like, Rogan has such a big following that you start going down the rabbit hole, and he already alludes to the CBDC. It's not like one connection from CBDC to money that isn't controllable, and it's there. And so, like, again, to expect Rogan hasn't understand one step from CBDC is a money that can't be controlled. Like, we have to be, you know, again, it's fascinating because these people are smart. I think they have, it's Odell's whole thing. Like, once they're on the platform that can censor them and take them off, they're going to self-censor. So as much as even All In likes to say that they're against the establishment and Wall Street Journal and all that, at the same time, like, they're always thinking like, it's not even about what the establishment cares, because they're not the ones giving them money. It's the people that are their LPs and their investors and that are, they're like shareholders in whatever different fund formations they have. That's the problem they have to basically speak to at the end of the day.
For sure.
Yeah, for sure. And I don't want to turn this into an all-in critique episode. However, we do have more thing. Logan, pull up the first chart. So obviously, talking about the Fed and the Treasury, they only have so many levers in front of them that they can manipulate to try to land the plane softly. One of those levers is manipulating the data. And so CPI came out today. I believe the official print was 3.2%. And Logan, if you can pull up that tweet, the first one with the meme, it's crazy how bad they're manipulating these numbers.
Okay, great. Yeah.
So US CPI is 3.2%, food away from home inflation 7.1%, shelter inflation 7.7%, transportation inflation 9%. And if you take out those latter three metrics, like core CPI was only up 0.2%, and that's the headline they're running with. Full CPI is 3.2, core X food, shelter, and energy is 0.2. We got inflation under control. Trust us.
Yeah, just besides your major cost buckets, it's under control.
The signs are everywhere. It's really fascinating to see like the news and everybody talk about soft landing and CPI, and then you go wherever you go, and there's just this grim, like, whether it's you walk in somewhere and it's like, oh yeah, man, times are tough right now, or it's across the board. There's a number of anecdotal references that I've experienced the past couple of weeks, and I'm sure you guys have as well. We are deeply in a recession right now, and nobody's speaking of it.
Yeah. Well, Logan, pull up the second tweet too. And that's the point I wanted to make with this, is that there is that class of incumbent high finance venture that do believe what the Fed is feeding them. And so, but when they are faced with the reality of the economy, go back to the first tweet so we can read it for people who aren't watching. So this is Jason Calacanis again. Don't want this to be an all-in critique podcast episode, but it's turning into that quite a bit. Jason tweeted on August 4th, so less than a week ago, people are complaining about the economy and some feel it's never been worse. We have the lowest unemployment and largest job openings of our lifetimes. Inflation is moderate. You can get anything you want delivered to your house in 2 hours to 2 days. Consumers complain constantly. And then a few days later, the next tweet, on August 7th, I believe, he tweeted out 3 bags of groceries, $350. Some high-end items like locks, but my Lord, everything is $12 now. So I think Jason, with these two tweets, is essentially like proving the archetype of the person who's going along with the narrative that the Fed and the BLS are putting out there. Like, the numbers are good, getting back to this recovery. But then when faced with the reality of the situation in real life, they cannot help but call out like, oh shit, like this is expensive.
But you just hit the nail on the head, Marty. You said not turning this into an all-in critique, but the idea is going as far as saying this is like, a little bold statement. This is where the alpha is. And what I mean by that, and it ties into why they're saying what they say, is they're telling you how they want you to play it. We're telling people how we want them to play it, like how they should play it. Like, they need to protect themselves. They need Bitcoin. This is how you should be thinking about the world from first principles. They're telling you, oh no, everything's fine. CPA is fine. Like, just go back to your business, like bonds, 2%. Like, there's two different things happening. In the same way, when you go to CNN or whatever, it's like, oh, inflation's fine. It's there, versus like who's actually telling you the truth. And that's like the delta, or the thing that we're describing here, is like they have a good view of the world because they're experts in their own field, and which is very important, but they're just missing the other side, whether it's because they truly miss it or because they're just talking their book.
It's hard to see it if you're in the ivory tower, and all of these guys are in the ivory tower. They've been too successful, and they're in the insulated bubble of only hanging out with very successful people. They're barely detecting the fact that there's pain for most consumers, and it takes $350 of groceries to figure that out for them. But go talk to the families who just canceled Disney Plus because they're tightening the belt. And Disney Plus is down it was 9% in subscribers, or 7 or 9% in subscribers this quarter, because people are tightening the belt. That's middle class and upper middle class people, and working class people who are looking at their budget thinking, man, groceries are a lot more expensive now. Where can we find a little extra money? And they're crossing off the streaming services. That's the pain. And that's what Jason or any Silicon Valley venture capitalists can't see, because they're not going through that exercise themselves, looking at their budget, going down the list of their credit card expenses for the month and trying to find things to cut. That's not what Jason's living. And so he's not going to see Bitcoin. He's not going to see the pain of inflation, and that will drive him to appreciate Bitcoin. Whereas middle-class families who are trying to save for their children's future, they'll be able to get it quicker, and hopefully they do.
Yeah. And I mean, this actually provides a good segue into really diving in the state of venture with Cam here. I mean, you mentioned the ivory tower in the venture space. The ivory tower is obviously in Silicon Valley, San Francisco, but it's like we were chatting before we hit record, the state of venture right now is in a state of disarray for many people. In Cam, like, what are your thoughts on, number one, the state of venture, but like the trends? Obviously, Brickyard, you guys are stationed in Chattanooga, far away from Silicon Valley. Like, is there a tectonic shift happening in venture where maybe you don't need to be in Silicon Valley or San Francisco to be backing the best companies? Like, is venture sort of distributing a bit more?
Yeah, I mean, the venture industry has gone through like a pretty radical change post-COVID. So like COVID happened, and all of a sudden like all of venture funding, like basically stopped during the lockdowns, and then it came like roaring back, and then, the prices just went through the absolute roof. I'd say that venture investors have been investing steadily more outside of the tech hubs over the last, call it 6 or 7 years. COVID just rapidly accelerated that. And so teams that were in SF or in Seattle or in New York, and they were fed up in the lockdowns, talent just went poof. They went all over the country. Cities, bigger. The big recipients were bigger, non-giant metro cities like Nashville, Charlotte, Raleigh, Atlanta, Dallas, Austin. Those cities just got hammered by, talent leaving big metros and flooding in. And so venture investors started to have to chase it, the talent to those cities. And for the first year or two, it was all Zooms, and it pretty much now still is all virtual in terms of diligencing companies. I'd say you only make an in-person visit to a city or to a company that's not in your city, well into the diligence process of a company, maybe even the partner meeting. And in some cases, checks are just written, without ever meeting in person. So that has all happened in venture. On the valuation side, valuations are just plummeting. They went through the roof when everything sort of crescendoed in 2022. And prices, I think about it money's like a river. The big money managers are basically behind the dam, or the Fed, or right under the big fish sitting right underneath the dam. And then the further you go downriver, it goes down from the BlackRocks of the world to the big private equity of the world, to eventually get down to venture capital. And then even that's broken out by growth stage venture and early stage venture. And so by the time prices get down to the really, really early stage venture capital, everything else has corrected. So the early stage pre-seed and seed is the last to correct. And that's where we invest is in pre-seed and seed, which is your first institutional check that you would take as a company. Those prices are now being affected. And that's been happening for the last, 2 months or so, 2, 3, 4 months or so. But I think they're going to continue to correct. But I think we're probably, 50% of the way there.
Kim, can you talk about, you referenced your journey 19, 20, and then starting Brickyard, where the Bitcoin lens has helped? Because I think that's a big component to this, right? It's we talk about, whoever in VC, and we can make fun or not in their lens of the world. But I think we'd all agree here that the lens of Bitcoin and going back to first principles and opportunity costs help in how you navigate and think about risk and opportunity and where you place your bets. I'd be curious kind of how that's changed your perception, if any, and then how you kind of help the firms and how you provide, other value outside of just capital.
Yeah. I mean, I think, it's weird being in venture and being a Bitcoiner. And I learned this, when I went to Miami. This last year was the first Bitcoin conference that I went to. And I was welcomed with open arms and got to meet some of those amazing people. Marty, obviously you were one of them. And Michael, I don't think we saw each other down there, but it was a moment where I realized venture investors are not really respected in this world because we are in the other system. And I think it's a first move of any Bitcoiner would be well, a VC doesn't really understand that they're playing in the wrong sandbox. And so I had to continue to kind of remind people no, I'm a Bitcoiner. This is what I'm doing. I'm allocating capital into early stage companies, that I believe in. And I've started investing, I want to do as many Bitcoin first companies that I can do. I've done a couple now. But it's mainly more of like a mindset of like, it just goes back to the serious people thing. Like if you go to justlaybrick.com, which is Brickyard's site, it's just, you'll immediately understand we're drawn to serious people. And so, I think the Bitcoiner in me is probably that voice that you hear resonate across, what we really think matters stylistically with early stage, founders, that they really understand that the game that they're getting into, and they're taking it, super seriously.
Yeah, I mean, that's one thing we really try to focus on 1031 too, like taking the what many would deem the exuberance of the probably like the last 15 years until a year and a half ago that existed in venture and just in markets more broadly, but especially when you're investing in Bitcoin businesses, like that's one thing that we really focus on. Is like, all right, you really have to focus on profitability and like getting there as quickly as possible. Like this game is not going to be the same as it has been throughout the 2010s and early 2020s. Like you're really going to have to figure out product market fit, go to market strategy, getting revenue, getting profit as quickly as possible. And I think that's another interesting topic we could dive in, is like, especially with the emergence of AI, like what are your thoughts on like how these companies actually scale up with as little as possible? Like, yes, getting venture capital in the door, but having somewhat of a bootstrap mentality to make sure that they're actually running profitable businesses.
Yeah. Well, I mean, what AI is going to do is it's going to allow operators to operate with much less purchasing power, is what I'd say. Is, it's going to create this deflationary force that's like significant. I mean, like yesterday, like I launched our like swag store for Brickyard yesterday, which I just opened a Bonfire account, and I went and toggling between Midjourney and Photoshop. Like I spun out like 5 t-shirt designs in like 30 minutes that are like really good, and it's like. That would have I can't imagine how much that would have cost to like get exactly what we wanted in something like that. But it would have been in like it would have been a designer's time for a week or more, and now it's like something that a non-technical person can go in and spin up in a few minutes. And so what AI is going to do for these companies is going to allow them to operate on less capital. And so we're huge proponents of our teams, like, burn. You should look at your purchasing power, the dollars you have in your account, as like, this lifeline. I mean, your default debt, all these companies, pre-seed and seed, are still burning money. If you're leaning into growth, I mean, it's very difficult to be totally profitable from day one. But if you have that mindset of staying really efficient from day one, and that your burn really doesn't have to increase that much, as a percentage of like your revenue or your that you're driving, it's that's the way you should think about building these businesses. But AI is just going to allow these teams to go way faster on less purchasing power.
Yeah, Cam, that's what really gravitated when I conceptually had thought in my mind of certain concepts that Brickyard's doing and hadn't seen it in practice. And I don't know, I think it was Trey from Unchained initially had mentioned what you were doing, and then Cam obviously made the introduction this past year at the conference. But this idea, and Marty was there at the first beef summit in Kerrville, Texas, a small town. This was last year, I think. The years are kind of blending together, but it was the first beef summit by Texas Slim. And one of the core ideas was it was in the middle of nowhere in Texas, and it was meant to be very intentional. If you went out there, it was like the proof of work. You were serious about business, and you were serious about the mission that they were on. And I think of what you're referencing in the same way of like firms and companies have been started, and they've burned capital. They've assumed that they have to hire HR and marketing and design, like your reference to AI. and you get the dollars in and they go out, and head counts the name, whether you're at a big company like Google or you're even starting, it's like, how many people do I have reporting to me? And I still think that exists. Like we still, even though we're talking about all this kind of like pain and companies either going under or being laid off, that is still like built in the same way that like a fiat mindset is built into that the dollar is going to last for forever. But what I saw was like that not only did you set up the place in Chattanooga, all the resources, but then you required the entrepreneurs to go there. And I don't know the exact mechanics, and you could probably, you can clarify them, but, roughly 12 plus months, find product market fit, because somebody willing to do that was that like heuristic of, oh, this is the person from a capital allocator that is your dream person you want to give $1 to, because it's going to go 10 to 100x further than it would go anywhere else. And that's what AI effectively does, right? It just like allows for max leverage on what somebody's attempting to do. We think about this here at OnRamp too, how we build the business from a very first principle, because at the end of the day, like our opportunity cost is BTC. And so for every dollar, every minute you're spending doing something else, well, that's a sat less earned or sat that couldn't be coming in. And so it's just a very interesting, this is where I tie back to you being a Bitcoiner before, because you had this concept before really fully going down the rabbit hole. And it plays exactly to like the version of how I see the world plays out of capital is abundant. It's everywhere. It's really about, and it's not even access anymore. Like access, oh, I know this person. So it's actually what can you instill in the learnings like yours at Bellhop that can say, oh, this is the difference from going to 0 to 1 or 1 to 10 or 10 to 100. And that's what's, in my mind, what's really been lacking for the past, let's call it 30 plus years in venture, is like, it's more of capital allocators versus like actual builders.
Oh yeah. I mean, I think we have like a domesticated animal problem in venture, where like founders are like wild animals, and like your Harvard MBA who graduated and went and worked for an iBanker for a number of years, and then got a job in venture capital and sort of worked their way. Like this is and I'm not shitting on those guys. Like that's a very specific they out of the world. Is like they know how to run an operation when a playbook is given to you. Like from the time that they were 10 years old, their parents were grooming them in like, how do you get into Harvard and so without shitting on MBAs, I just want to make the delineation. There's a difference between your pure founder who is this like independent thinking like ball of sort of like manic energy of this neuroticness of like, I have a problem and I have to solve this problem. And the natural path of any startup, like you can get by with breaking a lot of rules early on, and like in a lot of cases, like you have to break a lot of rules early on. You have to think totally outside of the box. You have to be willing to take risks and do things that you could never do, and if you're working a corporate gig. But then as you grow, like you have to start taking on some of those like domesticated aspects of like, how do you run a board, and how do you manage your investors, and how do you run like a large organization. I think the thing that we've sort of witnessed in venture is just like, we have a whole lot of people who are domesticated animals who are like vetting these wild animals. It's like golden retrievers that are like vetting Siberian wolves. And in a lot of cases, there's just this disconnect, and it's the classic like there's a herd think that's happening, and I think a lot of the capital allocators are in the business they're missing the point that like, especially at an early stage, when you're not looking at financial statements and you're not looking at like a ton of traction data or like historical data in the business, it's like you have to stare into the heart of this founder and understand, like, is this a wolf or is this a dog? And if you can place all your bets in wolves, like that's how venture returns happen.
Yeah, that's exactly right. I think because you have to back test the story. like it's the idea maze, right? You know, the whole everybody knows Bezos was successful, but the end they don't know that how many times he failed. And so he'd go and, you know, you go a direction and then you have to reverse back out because you're more times going to fail than not. But when you hear the story of like the anecdote when somebody's pitching, it's like, well, wait, let's back into how you got to that story. Because it's easy to tell the story. Everybody's a storyteller, but it's like, did you actually, like, to your point, because you said it and it's probably something that you lived through that most people wouldn't. It's like, oh, I didn't sleep for 3 days because of anxiety, because I had, you know, capital, or I had to make budget. And those little things are, I think to your point, yeah, what's been missing in that true venture sense of like somebody that built, then when you allocate, the dollar again goes further for the LP as well in the same instance, because you've been there and you know where to place the bets. You're referencing the little ball and you're trying to write, in Texas, we call them cowboys.
Yeah, I love it. Hey, I was born in Texas. I was born in Houston. I'm a Texan. I love my Texas boys, girls.
That's what you were sending me. You're sending me pics. I think it was your granddad's ranch was right by where I grew up, near like outside of San Antonio. So we're gonna get that the plane going back and forth from Tennessee to Texas.
Let's go. Let's do it.
I do think we should know we have a redeemed MBA on the call right now. there is a that is possible for
every time I bring this up, I know I'm offending a shit ton of people, and I don't mean it that way. It's like venture in a lot of ways is a relay race, you know. And I know a lot of MBAs who are absolute wild animals, you know. And it's just, I guess my point is, it's like venture capital used to be this like non-fully optimized thing. And now it's like a fully optimized thing where it's like there's now a playbook. If you want to go raise venture capital, it's like, okay, you need to get in Y Combinator. How do you get in Y Combinator? Well, there are literally like guides online that you can go and talk about, like how do you maximize like your 10-minute interview with YC. You know, how do you? It's like it's now the playbook is out there for how to raise capital. There is no playbook for how to build a company. If you're building something that's never been built before, which is hopefully any venture business that's getting funding is building something new.
Yeah.
I
was gonna say that
you're actually preaching to the choir, basically. I have a Stanford MBA, and I know a lot of venture capitalists, classmates of mine, and frankly, none of them have ever been hurting for where's their next paycheck going to come from? You know, how are they going to make their mark? I wrote a piece 3 years ago now that is probably still my best bit of writing, called "Why the Yuppie Elite Dismiss Bitcoin," and it's all about my personal journey of coming from that world and having to reckon with how Bitcoin undid everything that I was taught at Stanford, and how that created a rift between where I was at and how everyone I know still thinks. And they're all in the ivory tower. And I used to be in the ivory tower, and I used to think that way too. And those are not wolves, because wolves are hungry. And you have to grow up hungry to be a born wolf, or the alternative is you get wrecked. And so I went through altcoins, and I got wrecked, and I got humbled, and that's actually what allowed me to shift my mindset outside of what I had been trained in. And I think that's the difference between the wolves you're looking for, the wolves that are out there, is the hunger. And, we're making fun of Silicon Valley VCs today because they've never known real hunger, real desperation to prove themselves, or fury about, the system. And those are the ways that you make a wolf.
Yeah.
Yeah, I agree.
Yeah, it's almost like once the playbook's written, that arbitrage opportunity is out the window. That's why I think, particularly with Bitcoin-focused venture, that's why, obviously, at 1031, we think there's a large arbitrage opportunity there, because being able to find the founders, those wolves, that not only understand Bitcoin, but understand the differences between Bitcoin and altcoins. And then on top of that, what Bitcoiners as users need from a product standpoint. And then the arbitrage opportunity that exists for the 1031s and brickyards of the world are the capital allocators who understand those differences too and can allocate capital that way.
You know, it's funny to me, you know, when I think about venture, it's funny that it's more like ironic that the vast majority of venture funds will have no allocation in the highest returning technology in human history. Because of like two things. Like one, it was inherently accessible to all people on Earth from day one, and they couldn't justify the fees for investing in it. Like those are just the two reasons, you know. And you know, I love what you guys are doing at 1031 because you're allowed to you're able to get a force multiplier on, like, you know, this thing that we know to be a certain thing. You know, the companies that are building inside of Bitcoin, like Bitcoin native businesses today, you know, there's such a massive upside there. It's funny for me saying I run a venture fund, and it's like, you know, I went to my partners and I'm like, we need to have like 15% of our fund in Bitcoin. You guys realize that? And they're not as like down the rabbit hole as I am. It's just funny, like that's never going to happen at Brickyard because, you know, you go raise a fund on like, we're going to invest in these teams that fit, you know, this sort of archetype. But unfortunately, you know, Satoshi Nakamoto he's not going to come to Brickyard for a year, so we can't we can't put an allocation in it.
It's funny you mentioned that as we have more conversation with the capital allocators, that's a common thing that comes up. It's like, well, where do I put it? Like, how do I bucket this in an asset? Like, that's what precludes them from it. Is it a, you know, real estate? Is it under commodities? Like, where does it fit? And there's these like legacy areas or frameworks that has kept people so far from it. And to your point, I think that's exactly where it ends up. You'll probably be one of the first on a traditional venture side where you hold BTC because it just helps de-risk the overall, you know, return of the fund. But then that seems standard, right? Whether it's the same as a balance sheet of a company or as we were, you know, pensions, endowments, family offices, like they have, it's just like a personal balance sheet, right? You start with 1-2% because you're looking at it and ultimately it ends up being your, you know, it's your base unit. It's just an interesting dynamic where the legacy framework of how you evaluate your portfolio or how you preserve your purchasing power precludes individuals like a venture firm for the past 10 plus years or, you know, Bitcoin's existence from holding any of it when they would have just helped them return the capital to LPs instead of writing down zeros or whatever mess we're going to see happen in 21 and 22.
Well, like, and to that point too, like, I guess we can do like a live sort of like spitball, like on pitching to these institutions. Obviously what this podcast is speaking to is that caliber of investor is like, you have to internalize the fact that this is a completely different framework to operate within, a base to operate from. Like, and there's obviously something here you're trying to figure out what framework it fits in from your investment mandate or whatever it may be, your personal preference. And it's like, if you want to benefit from the monetization of Bitcoin, throw all of your frameworks out the door and just get in some way, somehow. You have to either make an excuse to get in or just create a whole new different framework for it, because it is a whole new animal and it's not going to fit perfectly into any of the frameworks that you've worked with historically.
Make a new damn bucket is the short of it. You know, like, it doesn't fit into real estate. It's okay. Yeah. It's a scarce hard asset. It doesn't fit into real estate. Most people don't touch gold. If you do touch gold, you're closer to being able to find place in your portfolio for Bitcoin because you have this hard asset commodity mindset as part of your strategy. But the alternative is miss out. It's make a new damn bucket for this thing, this technology of this digitization of value, or miss out on the digitization of value.
Marty, you'll love this story. I was getting, we get some advice and go and chat with a mutual friend, one of the, not full-time there anymore, but at one of the largest alternative investment firms. And he was giving some guidance on that when he was selling one of the funds that they were to institutions. They were like, well, where do we fit it? And he's like, I don't care where you fit it. Just put it like it's returns. It will return what you're looking for. It's up to you. It's not my job to do. But it was alluding to like what Cam was referencing. It's like there's just this framework that everybody's stuck with. And like, I can't touch this. Like it doesn't fit within the guardrails of how it's real estate commodities. It's really fascinating.
Here's what I am hopeful is going to happen over the next, like through this election cycle, I think is when like a lot of this is going to happen. And I know all of us following RFK and all the other, presidential candidates that are Bitcoiners, but this is going to be the first time where Americans realize like, wow, there are multiple presidential candidates that believe in this like whole different thing. And I think what's going to happen is, I struggle with figuring out like how RFK actually like mechanically makes his way into the presidency, but I sure hope that he sticks around for a really long time because he's providing some really good things for the American public to think about, namely like what is purchasing power? And I think the problem that Americans like as a whole that have today is they think of money in like monetary units and they're not thinking about money in purchasing power. So even though they've heard inflation, they haven't like grasped that like energy versus like units sort of like dynamic. And as Americans start to understand what is purchasing power, they're going to realize what the Fed has been doing. And you're going to have candidates like, RFK, they're going to be beating that drum about how the Fed is the reason that we've been able to fight all these wars and how the Fed's the reason that we're doing this. I think people are going to finally come to the understanding of like where Jeff Booth is at with price tomorrow and with, dropping price. It's like when people understand that money is like this is energy. It is like, I was thinking prior to this, to coming on, I was like, what are some of the things I want to say? It's like the Apollo computers consumed like 70 watts during operation. An iPhone 10 uses like 3 watts to operate. The iPhone 10 has 100,000 times the processing power while consuming like less than 5% of the energy that goes into it. And like if watts could somehow be inflated by like an international science commission or something, an iPhone 10 today would probably cost like 120 watts to use when it should just cost 3, right? And so the thing that I'm excited about is people are going to realize, over the next few years, like what purchasing power is, and there really is only one answer, of what is the alternative. And, it's the thing that's like irreversibly ties money to physics, and then lets the prices, fall as like the people, you and me, like as we create value in the world, like that value wasn't created by like empty dollars that were thrown into the economy. It was created by like us going to work and creating value and creating new efficiencies and inventing new things, and that's where the value in the world rises. And, money just needs to be this perfect one-to-one representation of all the value in the world. Like it doesn't need intrinsic value. It's just its intrinsic value is that one-to-one perfect bridge to the value that, we all have created and, and earned in just going to work every day. So anyway, that's my soapbox that I wanted to, get off my chest while I had this awesome platform.
Yeah, it reminds me of the MBAs and PhDs on Wall Street. It's haven't figured out real returns versus nominal returns. Like this inflation thing is kind of funny. We've been talking about it for 2 years. It's like, roughly talking about it 2 years. Reality is 2% inflation hasn't been 2% inflation for a decade plus. It's probably been 5 to 10%. Now we're at 15 to 20, and everybody's saying it's 3. Right? Like, I mean, it's just nobody says it, but it's true. Like, you go and look at what it costs to do anything, and it's like, this isn't 3, this isn't even 7. It's closer to 10 to 15, if not higher. But nobody talked about it. It's just like, no, we're just in this like thing. And the 2% everybody's benchmark was really probably 5 to 10.
Yeah. It's like the NBC meme of like the dude with the shitty beard and the bald head just like pointing with his mouth open, like CPI says 3.2. Like, it's like, it's like, don't believe your lying eyes. It's 3.2%.
Yeah. And to add on to Cam's point, that's entirely right. I did have a hang up when I was going down the Bitcoin rabbit hole of thinking in terms of what you were saying, but then not having faith in humanity to figure it out and to get there. Like that's a leap of faith. But then, the other piece of this puzzle that comes into play is what Saifedean emphasizes in the Bitcoin standard of you can't insulate yourself from other people having a harder, better money than you. And so, people will either figure it out or it will happen to them and they will be forced to react to it. So thankfully, it doesn't even rely on people figuring it out. It's an economic reality.
Couldn't have said it better.
And I mean, we have a minute left here. We need to be respectful of everybody's time. I think this last 10 minutes has been exhilarating. Cam, that soapbox monologue was impeccable. That's the other thing. Like any high net worth individual institution listening to us, like what Cam mentioned, that connection of the digital and the physical realm via Bitcoin, the digital money that is connected to the world, very tightly connected to physics via energy that is necessary to produce that money via electricity, is an innovation and an unlock for humanity that has never existed. That connection, not even correlation, a direct connection between energy and the digital world in the scarce asset. Like that is what makes this go around.
Money doesn't grow on trees.
No, it does not. Grows on Merkle tree. But
oh man, that's a terrible Bitcoin dad joke. I love it.
Well, guys, thank y'all so. I mean, this has been. I'll just say, I'm sort of on an island, and I'm not in the in the Bitcoin world every day with what I do for work, and it's like I swear I go home at night and my mom or my wife knows when I've been talking to Bitcoiners. It's like I love it. Thank you all for one, just having me on here, but two, I'm gonna just know, like, for the rest of today, my heart's gonna be a little bit happier that I got to be around other people that understand something pretty important, and I appreciate everything that you guys are doing. Like, you guys are the best. Oh, the best, and please keep making it happen.
Wait till we record in person in the Brickyard studio. We got to make it happen.
Yes. Anytime you guys want to come in, I'll come pick you guys up. I'll do anything. Y'all bring it on.
Well, next time we do it, we'll do it in person, Cam. The feeling is mutual. We're really honored to have you on and love what you're doing at Brickyard and sort of seeping your way into Bitcoin. It's really important to see, and that's like what we're trying to portray to the audience is like, hey, it's not just us crazy Bitcoiners thinking about this. Like, people in your world are beginning to think about this more and more, and I think you're an incredible example of that. So thank you for taking some time to chat with us today.
Thank you, guys.
Thanks, Cam.
All right. We'll see you guys next week.